Nifty end with marginal losses today, with the markets taking a breather. It's been a massive last fortnight or so, a range-bound session all told. The mid-cap index outperformance continued. The index hit a record high once again.
Sugar stocks rebound after the government reverses its decision to ban use of sugarcane juice to make ethanol, but limits the diversion to 17 lakh tons.
Siemens is the stock of the day. Shares rally after the company's board approved setting up an energy business subsidiary, kicking off a restructuring process. Hello and welcome. You're with us here on a new edition of Markets Forward, the show where we aim to get you all the key data points you need to know as you gear up for another trading session. I'm Prashant Nair. With me, my colleague Nigel D'Souza. Nigel, hi.
Well, hi, Prashant. And we've got you covered for the next 20 minutes. We'll tell you all the big news developments all through the day that transpired on Dalal Street. We'll get you the top corporate voices, and we'll also prepare you to look ahead with regard to all the key data points that you need to track for tomorrow's session as well. But let's kickstart the show with the market action first, Prashant.
I mean, just a bit of a quieter day, right?
Yeah.
We used to boom markets, and today it was not boom. It was a little lower. So the Nifty ending, I mean, neither here nor there. So no real big takeaway from today's price action. So quiet day on the frontline indices, but I have to say that the overwhelming sense is one of bullishness. When I say sense, I mean sentiment and which way. The general bias is that the market eventually is going to head higher. We had one phase of consolidation, if you remember, post the state election results. The market rallied for about 3 or 4 days, and then that Thursday, Friday, and then the next Monday, the market did nothing. And then, of course, last week we got that Fed surprise on Wednesday, and the rally restarted once again. But, I mean, it's 6% on the Nifty last 10 days. On the Bank Nifty, 7.5%. Some $3.5 billion has come in. I mean, so it's natural that the market kind of takes a little bit of a breather. You look at the sectors which pulled back today: PSU banks, real estate, the private bank space. I mean, actually, the Nifty bank was down about 0.6%. So a bit of a meaningful cut. Supports, I mean, I think that's what you need to watch out for. Gap area at about the roughly 21,050 kind of levels. That's where the Nifty should find support. And on the Nifty bank, it's about 300 points from where we left off, which is the 40-hour exponential moving average. So, I mean, the game has been to try and buy the big dips. Those big dips have not materialized. And, of course, trail your stop losses around those levels that I mentioned. Nigel.
Well, that's right. Some consolidation on the Nifty is par for the course, I think so, right?
Yeah.
Because the Nifty bank, the one that was actually playing the splendid innings in there, that pulled its leg off the pedal. And that's why, in fact, that ended lower with a cut of closer around 300 points odd. But the mid-cap party, that continued. We had more number of stocks that were advancing in comparison to the number of stocks declining on a day that the Nifty went home with a cut of around 50 points. So clearly, the party in the broader markets is well and truly on. And PSUs, from different sectors did very, very well. IRCTC, that was moving like a bullet train today. That one was up and about. Hindustan Copper, you can argue valuation-wise that the stock shouldn't be near 200 rupees. But you've been arguing that from around 150, 120 rupees as well. The stock continues to move up. So that was up closer on 5%. And even BHEL was up closer on 3% in trade. What didn't have such a great day today was cement as well as real estate. Remember, some of these stocks, they saw a big run-up in the last couple of weeks or so. Even post the state election results, these stocks did very, very well. They paused for breath today. Both cement and real estate stocks were a little bit under the weather today. But let's run you through what we have lined up on the show for you today. We start off with all the top movers of the day. Hormuz will be joining us to run us through that list. And the sector of the day was sugar. Manisha Gupta will be joining in to give us the reasons why the sector was buzzing today. And CNBC-TV18's popular segment, D Street Chatter, is also on the show. Nimesh tells us why JK Tyre was buzzing in today's session. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session.
Okay, well, let's go straight across to Hormuz, my colleague who's standing by with the top movers of the day today. Hormuz.
Well, Nigel was highlighting about the mid-cap party, and what was having a party today definitely was IRCTC. 12% higher today. It was the biggest single-day gain that the stock had in almost 3 years, and the stock has rallied 30% in the last 1 month and has been an underperformer this year compared to other railway stocks. But over the last 1 month, it has definitely been an outperformer. What has also done well today was SpiceJet and news news emerging that it is among the suitors for Go First, and that stock ended 20% higher today and has snapped a 4-day losing streak as well. Defense stocks were up and running in today's session, and Bharat Dynamics had a good day, almost 10% higher, ended slightly off the day's high. It's the biggest single day gain in 5 months, and that stock is also up 35% in today's trading session. Kelton Tech Solutions, not a stock that we talk about very frequently. That stock ended almost 12% higher today. That stock has won a multi-year project from LIC, and courtesy of today's move, the stock's market capitalization crossed the 1,000 crore rupee mark. Laurus Labs was a stock that did well today. I highlighted earlier this morning how the 200 DMA is a very important level for it. It is also nearing its recent swing highs of 418 rupees as well. Salazar Techno Engineering was the stock that did well. It's a board meeting on the 20th to consider an issue of bonus shares, and this will be the second bonus issue that the company will be issuing after 2021. UTI AMC, that stock ended almost 7% higher today, and that stock is up 12% in the last 1 month, but courtesy today's surge, that stock has turned positive for 2023. Teamly Services also had a good day today, part of the broader market rally. That stock ended 8% higher today, and that stock is up for the 5th straight day. And since that breakout from its 100 DMA levels, that stock has been on an uptrend. And lastly, Bajaj Auto, that stock is unstoppable as well among the auto pack, 3% higher today as well. The top Nifty gainer, 80% up so far in 2023, and it's on course for its best annual performance since 2009. Back to you.
Got it. All right. Thanks a lot for that, Hormuz. Well, let's get in our guests then on the show. We have Shilpa Raut of Prabhudas Lilladher and Gurmeet Chadha, Managing Partner and Chief Investment Officer at Complete Circle, who joins us on the show. Shilpa, you first. Tell us, what do you make of today's trading action? What are the levels you're looking at? And do you believe that the Nifty Bank is well and truly on its way, say, to around 50,000?
It is just a breather that was supposed to be happening, and it is there. So this is just a breather and a buying opportunity for people who have been complaining that they have missed up the rally. So these are the buying opportunities. The sideway move could continue for a day or two, so make use of that and buy this dip, because Bank Nifty is heading towards 50,000. If you look at the option chain for the next series as well, 50,000, the call writers are very, very aggressively active, with the support building up at around 47,000. So the downside is very much limited, and upside has a large potential for Bank Nifty. Talking about Nifty also, we see that 21,000 is holding on very strong. Even on weekly basis, for weekly expiry, we see that 21,300 is also holding on very strong. So there's absolutely no downside for Nifty from current levels. This is a clear buy. Just keep buying on these levels for targets of 21,700 to 22,000.
Okay, well, the mood is such, right? Shilpa, so it's well captured in that sense. But Gurmeet is also with us. Gurmeet, good afternoon. What are you doing? We spoke about PI, I remember a few days back. There was that small mishap, but stock stabilized since. What have you been doing in the PMS?
We're sitting tight, Prashant. So you just have to wait and wait for stock-specific opportunities. Praj gave that opportunities when the sugar news came, where the government banned the use of sugarcane juice and syrup for making ethanol and only allowed B-heavy molasses. Some of it reversed. The stock obviously is doing well. You rightly pointed out, we added something into PI industries because I think the capacity eventually will come in FY25, and there is huge leverage you have as an innovator in terms of process, in terms of efficiencies. The stock is still flattish at around 3,400 odd levels, and we are looking at more opportunities in now. I think the flavor is more towards large cap. There is more valuation comfort there, and there are a couple of names we are trying to add in energy. That's some space we very like, and I think the order wins, the execution near term, the expansion of margin. I think a lot of it is visible. So playing it selectively. But this is a good time to just step back and see that where all the valuations have become unreasonable. And I've been saying this for a while. The bond portfolio is as exciting right now. The 10-year has already dropped from 730 to 715. My sense is you will see 650 kind of levels in next 3 to 6 months. So if you just buy a 10-year bond, there's a good chance of double-digit returns on the table. So just balancing things right now, and any dips are welcome in a good market.
Interesting. Maybe some exposure to bonds may not be such a bad idea. Personally, I was as well putting in some money in the sovereign gold bond as well. Because I believe in the longer duration that should be a good investment. That's my personal belief as well. But Gurmeet, tell us about how you approach tech from here. That clearly has been the sector that's bounced back big time, say in the last 10 days or so. There are still concerns globally, mind you, and there's no guarantee that the US will have a soft landing. It could be a recession that we look forward to. What's your view out there? What do you like from the tech pack?
So, we've selectively looking at some large cap IT names where there was valuation comfort. Obviously, there's a sharp run up in last week or so. So we got benefited in terms of run up both in HCL and Infosys. HCL has a more diversified pool. It's not, if you see, it falls also less because the share of discretionary, non-discretionary is evenly balanced as far as tech spending is concerned. Very, very large ERD pie. Plus, they have a software business as well. So it's almost crossed 1500, almost a new high now for HCL Tech. Then you have a 4% kind of a dividend yield there. I think we would like to watch out the commentary more. I think the quarter would be still soft. I spoke to some senior people. The furloughs are still high. So we want to see if there's any improvement in the commentary, what is the on-site mix. I would like to see more announcements on the AI side. We saw a lot of announcements on digital when COVID happened. I think something similar will play out. My view is if you have a 3-month, 4-month patience, if you can stagger it, large cap IT offers very good risk reward. Mid cap IT is already run up. In fact, there's no harm in probably taking some money off the table as well. And the second space within that, which we continue to like, is this digital engineering and embedded software space. So if you see all three picks of ours, I mean, God has been kind, whether it is KPIT, LXC, or now Tata Tech. I think that's something which is more structural and long term. So that again, you have to be more a buyer on dips rather than trying to accumulate them at current prices.
Okay, all right. Stay with us. We'll just come back to you. Let's just focus on the sugar space, right? Stocks all plummeted last week, actually over the last fortnight or so. But today there was some reversal, partial reversal, because there is only partial relief also which has come through. Manisha is standing by to tell us what has happened. Manisha.
Thank you for that. Well, yes, we have seen a U-turn come in from the government from the kind of notification that we saw on 7th of December to what we got on 15th of December, where the government has reversed decision to ban on the use of cane juice for making ethanol. What we do know right now, as per the latest notification, is that it has been allowed. There's a reversal in the decision, and almost up to a 17 lakh tons of diversion is what you can see from the sector to the ethanol blending or ethanol usage there. So what the street is really waiting for right now is the fact that as and when the tenders will come in from OMCs, it depends on them on at what quantity or what amount and dates they come out. That is something that the sector will watch out for. We do also understand that the officials are suggesting that 6 lakh tons of sugar already has been used for ethanol blending there. 157 in total mills produce ethanol, and out of that 20 mills actually use sugarcane juice or syrup to make ethanol as well, and these were the most impacted, as we've seen in last fortnight also. The cap in place for 2023-24 is for the supplier ending October 2024. We also do understand that there is going to be a monthly review of the decision that has been taken, and the next one will come in the month of January 2024 there. Well, the government on December 7 had prohibited usage of cane, and we did see a huge impact come into the markets there. The other couple of things that the street will watch out for, one of course is tenders. Second is the pricing part, because as of now, whatever tenders are being filled, the amount part is being left empty because the price hike or the price revision for ethanol is yet to come, and that is expected. The industry clearly has already asked the ministry for the price hike, and it's expected that you could be looking at it in this week itself. 8 to 10 rupees of an increase per litre for various varieties of ethanol is what the street is as of now looking for.
Okay, Manisha, thanks very much for that. So that's a pretty tidy explanation of what has happened. Speaking of the sugar sector, earlier today we caught up with Vivek Saraogi, Managing Director at Balrampur Chini, who actually welcomed this decision. He said that the government has understood the sugar industry's sort of stand. He added the revised move will offer more flexibility as far as sugar output is concerned. He, although still fears that sugar production next year perhaps could be hit, added that the system could see about a 20 lakh tons of inventory build up, which is needed for next year. So that is Vivek Saraogi, the chairman of Balrampur Chini, with perspective coming in there. Let's just actually also get you the next element. Siemens is the other stock of the day that we want to focus on. It was up about 5% today. The company's informed exchanges on the 15th of November about a 3-step corporate restructuring plan. We understand that the first step of this plan is now complete and the second step is underway. Vivek is here with more details on this one. Vivek.
Absolutely, one of the top movers of the day today, Siemens India. Remember, on November 15th, like you mentioned, they had initiated this three-step corporate restructuring program that was largely necessitated by the fact that Siemens Energy globally was facing a liquidity crunch, and one of the ways in which they could go ahead and get some liquidity was by the sale of their stake in the listed Indian Siemens business. So along expected lines, the first step of that particular process was the fact that Siemens, the two Siemens that held stake as far as Siemens India is concerned. So Siemens AG bought the stake from Siemens Energy in India, and this was completed by December 10th. The other important trigger that analysts were anticipating was the fact that the company had told the exchanges that they would be looking to go ahead and demerge the energy business from the other businesses of Siemens India Limited. So that particular process has begun today. Along with that, so what they've done is they've incorporated an energy subsidiary, and they also begin exploratory steps on the demerger proposal of the energy business. Analysts expect that this particular step could be completed by calendar year 2025. And along with that, the most important thing to watch out for would be the fact that how will the shareholding look as far as the demerged energy business is concerned. It is anticipated that Siemens Energy going forward will be the single largest shareholder in that particular entity. Lastly, what you also have to keep an eye out for is that Siemens India Limited has committed to buy up to 5% of shares in Siemens India Limited, and this is for 750 million euros, a significant premium. However, this is subject to certain corporate guarantees being invoked.
Okay, all right. Thanks a lot for that, Vivek. Well, in our Corporate Corner segment, we spoke to Mr. Selvan, who is the President and Chief Financial Officer at Cholamandalam Investment Finance. He said that loan growth in the coming year, that's FY24, should be between 25 to around 30%. He also added that there will be an impact of the RBI norms as the borrowing cost will be higher by around 15 to around 20 basis points, and the capital adequacy ratio will get hit by around 15 to 20 basis points as well. Well, Gurmeet, I wanted your view on this one. Chola, it's been one of the big outperformers. So what's the view out there, and any view on Siemens?
I think both Chola and Bajaj will have some near-term impact, Nigel. How much, whether it's 20 bips or 25 bips we have to see. So let's say Bajaj has a 50,000 crore unsecured book, roughly I'm saying, and 25% more weight. There will be 1,000 per 100 kind of allocation impact, which can have some near-term impact. Also, I think RBI is a little worried on unsecured lending. So probably I can't rule out more measures to curb that. We saw the impact on Paytm when it happened. I think the better space is right now, as I said, there is valuation comfort in banks. SBI is available at 1.1 book value, 9 earning multiple. Bank of Baroda probably at 6 times, 6 earning multiple and less than book value. Even some of the private banks haven't done too greatly in last a year or maybe more than a year. I think one space we continue to like is this housing finance space. I think that's where the impact is minimal. You still have companies, so for example, Home First is talking still about 25-30% growth. Very, very good names, very healthy ROAs, expanding now more in geographies, have very, very good credit underwriting, and a lot of digital initiatives in that. So I think there I'm willing to pay a higher multiple for the growth. Higher, probably the growth will come, but there could be some near-term impact on return ratios, and there could be more intervention by RBI because I think there is some stress there as far as the small ticket loans are concerned.
Shilpa, any of the names which we discussed, Sugar, there was Siemens, which we spoke about. Anything comes on your radar as something which is tradable? Praj Industries, Gurmeet was talking about.
Yes, actually, talking about sugar, I was looking at Balrampur Chini. Balrampur Chini trading at around 404 right now. I believe that it has a lot of space for 425 to 430, 445 zones again, and a very long-term, very strong support around 380. So on any declines towards 381 should be a buyer, and look for targets till 445 again. Apart from that, also we see that Bajaj Hind is also very well poised with a very strong support at around 25-26 zones. That is also one stock one can look around for good targets towards 45 to 50 zones.
All right. We leave it there. Shilpa, thank you for your time. Gurmeet, thank you for staying on and sort of answering those questions. Appreciate it very much here on CNBC-TV18. We'll take a quick commercial break here. We'll come back and D Street Chatter will come up next. Our top events to watch out for also coming up on the other side of this quick break.
Welcome back. You're tuned into Markets Forward. Well, it's that time of the show where we get to D-Street Chatter, where Nivesh gives us an insight into all dealing room chatter. Nivesh, what's on your radar today?
Hi, Nigel. After a big up move last week, a bit of consolidation in today's trade. But I understand there was a large basket selling in mid-cap names at a leading FI desk. In terms of individual names, though, the first is a couple of large blocks. Arcane Chemical, there was a large block, 3.5% equity, got changed hands, and that stock was under pressure today. The second was Sapphire Foods. Even that was under pressure after a very large block. Nearly 6% equity got changed hands. I understand the PE investor was a likely seller, and clutch of investors bought in today's block, so disclosures could be important there. Manappuram Finance was the other stock, been buzzing off late, but there's a big chatter going around of a large corporate development. But I understand there was a large selling pressure from a leading FI in Manappuram Finance today. The third is JK Tyre. That stock was buzzing in trade, up 10% in today's trade, and on very large volumes as well. I understand the company is likely to raise funds via QIP very soon. And the last name is India Bull Housing Finance. Even that was buzzing in trade on big volumes. The stock is out of the FNO ban. Some HNI interest seems to be back, and the flows are quite strong as well at a leading HNI desk.
All right, Nimesh, thank you very much. Interesting list of stocks, so we'll keep an eye out on those. Well, what are the events to watch out for? I'm sure Ekta is standing by, of course. I'm sure there are some IPOs opening, Ekta. What else? But go on.
Yes, absolutely. I'll start with the global space, however. You know, we have the Bank of Japan, which is met today, and the conclusion will be tomorrow. We have the Eurozone CPI data for the month of November, which is expected to soften on a month-on-month basis. US housing starts. We have the Atlanta Reserve Bank president speaking when it comes to the Fed. So maybe some cues from there. G7 Finman and central bank governors meeting. Now back home, Gandhar Oil Refinery Q2 earnings call. Vedanta to consider issuances of NCDs on a private placement basis tomorrow. Camlin Fine Sciences, Mrs. Bector's Food, so it's an investor day for both of them. Godrej Consumer will be presenting at the Motilal Investor Conference. IPOs opening, Happy Forging, RBZ Jewelers, Credo Brands, which is popularly known as Mufti. LIC Council will discuss the IRDAI consultation paper on increasing surrender value. And we have the IPL auction for all those fans starting tomorrow.
Okay, all right, Ekta, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. You stay tuned to CNBC-TV18.